Hey everyone, before we get to the charts, I'd like to invite you to a free marijuana stock webinar this coming Saturday, October 29th at 11 a.m. Eastern. Just click the button on the screen, enter your email, and we will send you an invitation to join us. We will be discussing my 6 years of experience trading the penny stock marijuana sector. We'll be looking at the legitimate investments that are approaching, including an upcoming IPO on the New York Stock Exchange, and I will also analyze any charts that you guys request. I hope you join us. Thanks a lot.
Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today.
Hey everyone, so in this video we're going to do technical analysis looking at the charts daily and weekly time frame for MJNA, CANN, HEMP, AMMJ, CBIS, and TRTC. Again, the webinar that is this Saturday, this is a little sneak peek. The outline I'm going to be going over my experience, red flags in Pennyland, things that you want to avoid, and things that are going to give you signals that the bears are coming back, trading tips, current polls, legitimate investments that are approaching in the opportunity and that are already here, the future of the sector, and then we'll end it with a live question and answer, chart analysis, pretty much anything you guys and gals want me to look at, I will look at it. So let's get into these tickers for today. We've got MJNA on the daily time frame in breakout mode, and the day yesterday we had a big upper wick of profit taking. That's a red flag for the bulls. But we held the upper Bollinger Band, and whenever you're in breakout mode, as long as you hold the upper Bollinger Band on the daily, that shows continuation of strength. That being said, it is a bearish reversal hanging man, and the fact that it is coming after that long upper wick is a bit of a red flag. We did close at the high of the day, showing strength, but if we cannot break 13.2, then we will likely pull back and test this upper Bollinger Band again. So if your stock that you're in is in breakout mode, you need to update this upper Bollinger Band at the open every day and know what level that is, because if we close below it, we can anticipate consolidation is coming. And just look back at the previous history. Breakout, close below the upper Bollinger Band, then we consolidate for weeks and weeks and weeks. Breakout, close below the upper Bollinger Band, multiple days of consolidation, close below the upper Bollinger Band, sideways consolidation. That was a good bullish without much of a pullback. Nice bull consolidation there. But either way, the odds of consolidation after losing the upper Bollinger Band significantly increase. And I forgot to say at the start of this video, I have no position in any of these tickers, so I could care less if they go up or down. I want everybody to make a million, but just letting you know there's no bias in what I'm saying here. So the weekly time frame is right at the 200-week moving average resistance of 0.124. That is the level the bulls must close above by the end of Friday. You can see this week we already have huge volume, 2 trading days left to go, and we're going to see a huge spike in volume compared to the previous high volume weeks, which is a great sign for continuation for the bulls in breakout mode. If we cannot break above and close above that 200-week moving average resistance, we'll have to watch it very closely next week, and that will be a key level. And we're also watching the weekly upper Bollinger Band as support for the same reasons as what I just said on the daily time frame. Looking at CANN, we are consolidating now, and the biggest thing you want to look for on consolidation is volume. Increasing bear volume on consolidation is a big red flag. We don't really have that here on CANN. We did have a big, scary high volume dump day. That's a red flag to me, even though we did get to higher highs. That is certainly worth noting because that can happen again any given time. So volume is low the past 5 days as we do consolidate. The middle Bollinger Band support was tested by a bunch of names today, and we saw bullish reactions off of that off of that middle Bollinger Band. Off the top of my head, I'm thinking of OGRMF. I was watching it very closely, and today was a nice bull entry there in OGRMF. So we'll see if we test this support tomorrow. That's going to be in the mid 330s, and if we do keep pulling back in CANN, we'll be watching this middle Bollinger Band, and if we lose the middle Bollinger Band support, it will be a big red flag. We do have a bearish MACD cross unfolding, so a loss of that middle Bollinger Band combined with that bearish MACD cross would be concerning for the bulls. This is also a bit concerning. 200-week moving average resistance, 422, rejecting the price multiple weeks in a row with upper wick showing profit taking. We're still in breakout mode. The upper Bollinger Band here on the weekly is 346. If we close below 346 over the next 2 days, that is a red flag that profit taking and consolidation is likely to continue on the weekly. The one thing the bulls do have going here, look at the bull volume compared to the bear volume. This bear volume week is tiny, tiny. That's exactly what the bulls want to see. So no big red flag there. The only thing is that 200-week resistance is very clear, and it's going to have to take a big turnaround in the next 2 days to turn that into support. So it is more likely than not that we will see 3 rejections in a row from that weekly resistance. Hemp was a bit of a laggard on this move, and that is a strategy to play. Find the leaders of the sector and then look for the laggards that have not seen the move yet. So a little bit of a later breakout. It was a nice solid move, but we're now pulling back, and it's on decreasing bear volume. So again, that's what the bulls want to see. If we break 4-1, which is the low of this pullback already, we're looking down at the 200-day moving average support of 0.037. So that's an inside candlestick today. That's when the candlestick forms within the range of the previous candlestick. And you can use that information because if we break the high of this candlestick today, it's a bullish break from an inside candlestick pattern. And if we break the low, which is right where we're at because of the weak close, it's a bearish break. So we're more likely to see a bearish break due to that fact. And again, if we break 0.041, we're heading to the 200-day moving average support. The weekly chart is trying to break out, and it did last week, but this is very weak follow-through. It's a bearish reversal gravestone doji currently. We're still above the upper Bollinger Band, just above 4 cents. But again, the upper wick shows profit taking, even though it's high volume. And we need to see a move back towards 5 cents by the end of this week in order to save this weekly candlestick from being a bearish reversal candlestick. Next, we've got AMMJ, and we've got a tightening pattern forming here where we have our low on the pullback. That's a nice little bull flag looking pattern. Continuation to the upside. We couldn't break the high of 101. We've got tough $1 psychological resistance. So now we have a lower high. And if we pull back and break 65 cents, the low of this consolidation, we will have a lower high and a lower low, and that will be a red flag for the bulls. But as of right now, we're still holding that 10-day moving average support, which has been support for a very long time. We need to keep in mind this run now in 2 months has seen 1,000% gains. So this run is a lot more extended than a lot of the other names that we're watching. So profit taking could occur here because people are going to want to lock in their 500, 700% gains. So the 10-day moving average support is very important. That is currently at 81 cents. Close below that level tomorrow. Need to update it at the open because it's going to be even higher. And then we're looking down at 65 cents as the next support level. A break of 95 cents would be bullish, but the close near the low of the day does favor the bears into the next day. Weekly time frame, bearish reversal candlestick last week. We're not confirming it, but again, we're seeing another upper wick, more weakness, and this would be the first week that we have not seen a higher high in the past 6 weeks. So a little bit of a red flag, looking a little toppy at $1 psychological resistance. That's a very tough level. We still have the upper Bollinger Band support on the weekly in breakout mode, but we do look a little bit toppy here, and we might see further profit taking. And again, an inside candlestick on the weekly to watch as well compared to last week. Watch the range of this week, next week, to get some insight into where we are headed. CBIS pulling back now. 10-day moving average support is going to be tested tomorrow. That's going to be up around 49 cents. Decreasing bear volume on this pullback, so not a huge red flag. And little sneak peek into the webinar. CBIS financials are pretty gross. There's a lot of red flags in those financials. And I'm going to be going over how to look into these financials because it's very important to know the share structure and the debt structure of these companies. Penny stocks are not for investing, they're for trading, and the financials will prove that to you. So I'll show you what to be looking for during the webinar, and CBIS was a prime example of a lot of red flags in the financials. But that being said, great trading opportunity. Can't deny that. Huge move to the upside. So now we're consolidating. The low of the pullback is 0.046. That's a must-hold level. If we break below that, we're going to head down to the middle Bollinger Band support, which will be in the mid 3-cent range. And the bulls want to break the lower high pattern. We've seen lower highs now 5 days in a row. Bulls have to break 0.056 to break the high of today and try and turn this pattern around, keeping the 10-day moving average support. Weekly time frame, bulls need to backtest and hold this 200-week moving average support. Anytime you break over a key resistance level, you want to hold it on a backtest to affirm that strength and give confidence to the bulls. So that level is 0.0505, and with 2 trading days left, we could very easily maintain that support level. If we cannot, it will indicate that we are likely to pull back a bit more, perhaps down to the mid 3-cent range. But again, the bull volume far outweighing the bear volume this week, so that is a good sign for the bulls. We also need to keep in mind that as elections approach, it is very possible that we could see a sell the news type event. It really depends on what the polls look like going into the vote as to whether or not those results are going to be priced into these stocks already. And we'll look at that a bit more as we look at the most recent polling numbers this weekend. And last, we've got TRTC. TRTC, nice bull break, consolidating, losing the upper Bollinger Band support. It is some pretty high bear volume. That being said, it is some bull pushes to the upside as well, hitting higher highs. So some of that volume is bullish before the bears step back in. We can see the 10-day moving average support has held a lot over the past few weeks, 46 cents just above that level. It will be higher tomorrow. Need to hold that level. If we don't, we're looking at the middle Bollinger Band in the lower 40-cent range. Weekly time frame for TRTC still hasn't broken the resistance from April. It's one of the few names that hasn't broken those levels. We did get some nice higher lows and higher highs. Upper wick, this is a bearish reversal inverted hammer right now, showing upper wick of profit taking. So if we don't see further upside and a move back into the 50-cent range over the next 2 days, we will look for some potential further profit taking, and we have to make a move all the way to 75 cents to see higher highs. And that's not likely anytime soon, just watching how this price action and volume is showing up. We did have a nice bullish MACD cross leading to further upside, but the weekly time frame, we need to see a move back to 52, 53 cents by the end of this week in order for this big upper wick to not be present, which does indicate lots of profit taking. You can see the big upper wick on the last move led to a month of pullback, and that's not what the bulls want to see this time around. So there's tons of tickers and names out there to be watching. You want to be in names that have low bear volume and high bull volume and lack of resistance. A lot of these Canadian names are in blue sky breakout land, which means they have no previous price history resistance, and that is the ideal scenario for a bull. So again, join me this Saturday for the free webinar. I'm looking forward to it, and there'll be lots of good info there, and I look forward to looking over any tickers that you want checked out. I will see you then. I appreciate you watching. Have a wonderful night.